Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny. And holy crap, if you're a Meta shareholder like we both are, this was a massive move this week. And I got to say, we did see this coming over a year ago to a certain degree. We're going to talk about the earnings from this most recent quarter. We're going to talk about where Meta stock could go from here and how to value it at this current point in time. We're going to get to the video.
Two Super Guys Trade Stocks.
All right, man. Do you think Meta stock could see $1,000 a share?
Yeah. When?
It's a great question. All right. It's a really loaded question. It's complete bullshit, made up, kind of premise. But the whole idea here, right? Massive move, 20% this week on a company that was $1 trillion market cap before this move. Okay, just to think about the insanity of that. That's $200 billion of market cap creation in a day.
Yeah, that's disgusting. And though we talked about it and called it, I only have 7 shares. I kept on waiting for a dip like an idiot. And then I had a $16,000 buy, which would have been 200 shares of Meta on a limit order at $84. And it hit 86. And that was a good lesson for me to learn. Just fuck the $2. Just buy it.
Well, I mean, since we're talking about like our kind of meta history here, so we put out a video, like, honestly, right here, basically at this little lull. You'll see in a second.
Wow,
we called the bottom almost perfectly. I had accumulated 100 shares at that time. However, my general thing is to buy some companies I think are undervalued and sell covered calls to generate some kind of revenue while I think the market brings it back to reality. The problem is the stock got immediately called away from me, basically, because I had 100 shares at my last tranche or whatever, or buy order was like sub 90, and then I sold at like 140 covered call. It got called away from me very quickly. I rebought at like 180 because after it was like a pop there. I only bought 30 shares though instead of the 100, so I minimized my position. I didn't put as much money back in as I had taken out, and I still own those 30 shares to this day. But I'll show you kind of what that looks like right now. So this is a snippet from my actual Charles Schwab account here. You're looking at my cost basis of $5,500 on that, and it's now currently worth just a little over $14,000. Sorry,
yeah, that's wonderful.
$1,000 in gains on that. And then this really blurry thing here too. I'm sorry about that. It's got compressed weird. This is our video. Why Wall Street was kind of missing the real story with Meta stock, and that was published on Halloween 2022. Garnered almost 19,000 views at a 95% thumbs up rate. What about those other 4.4% of people that just hated the video for no reason whatsoever?
Yeah, well, hopefully the people who watch made money, because I bought like 30 shares around like 150, and then I sold again at like 250 because I'm like, this is going up so fast. This is crazy.
It has been crazy. So like October 28th was the closest date I could basically get to when we published that video. You're still talking about $100 a share here, and now it's selling for almost $500.
Yeah.
So if you time that perfectly, you absolutely crushed it. This is the quarterly report here, and I put all these green arrows on here to kind of highlight just how many things are going well at the company right now. All right, this is complete and utter flip flop from where they were last year, where they couldn't do anything right.
Right? Yeah, let's not forget. What's the guy who Motley, the guy
Fool?
who always, no.
Yeah.
Motley Fool? What's that guy?
Yeah, that's one site.
No, but the guy who runs it. Kramer. Jesus.
Oh,
he doesn't run Motley Fool. Sorry.
Yeah.
He had said, this is how you knew they were going to turn around. After the earnings report where they dropped down, he's like, this company's dead. They're making so many mistakes, I've lost faith. That was the buy signal.
The old inverse Jim Cramer, but revenue growth 25% top line, all right. And then they had this year of efficiency last year, so they actually brought their costs and expenses down 8% year over year. So they have now revenue growing 20+%, and they have their actual expenses coming down. What does that equal? It equals fat margins, right? And that's how shareholders get rewarded. Now you have the economies of scale with this fact they've grown so much and they've kind of minimized their costs. Look what happens to the actual bottom line earnings when you do that. Explodes 200% increase year over year.
Yeah, I mean,
yeah,
a lot of these companies hired a lot of people in like 2020, 2021, and there was walkthroughs of their day and the job at these companies, and they were working an hour a day, maybe. So
yeah.
Good that they trimmed the fat.
Yeah, Zuckerberg talked a little bit about that in the conference call, saying that they're going to try to keep it as like a leaner company going forward. And he's like, it's not just a profit motive. He goes, yeah, that's great, but he's like, I honestly think we work better when we're more efficient. Because don't get me wrong, headcount's going to start to increase. We're going to start to bring people on and for certain key roles within certain teams that like lost someone with a certain skill set, but they're going to still have an eye on efficiency going forward. So
I agree.
I think you're going to see fat margins for a
They're
while.
doing the opposite of Intel, right? It solves the problem.
Yeah. All right. So it still amazes me every time they report this, but their actual, kind of daily and monthly active users have continued to grow, despite the fact that it seems like very few people with access or interest in social media would be out there as far as like a pool that is not already on, their services. But they continue to grow. That's just insane to me. The other thing that kind of pivoted a little bit from last year is the ad impressions, as far as the number of them increasing the frequency versus the price per ad. In this most recent quarter, you saw increased kind of ad impressions of 21%. Okay, so that they're showing more ads. But the actual revenue finally increased 2% year over year. For quite a while, the revenue was going down on the ad impressions. And if you look at the whole year number here, they did have increase of 28% in impressions and down 9% year over year in revenue. Right? So they're getting less per ad, and that's been a general trend for them for a while. But they're finally showing maybe signs of stabilizing because they had a 2% increase in the quarter. It's revenue we kind of already talked about this kind of year of efficiency and how they're continuing to keep their costs under wraps. That was a great thing. Now, I have a mixed emotions about this next one, the share repurchases. They did have $6 billion of share repurchases in the most recent quarter. Okay. I don't love that now that Meta stock has had such a tremendous run. How fantastic would that have been, last year, right? Like that's the problem that these companies run into, is that they're unwilling to spend the capital on their own shares at the time exactly when they should be. Bible stock.
So I will say this is a 3-month lag, right? So they could have purchased those 3 months ago, which is still a great value because they went up 21%. I mean, it's in a day.
Sure. Yeah, that's one way of thinking about it. They did announce an additional $50 billion in authorizations. They had $30 billion on the books already that was still authorized, but they put another $50 billion out there just to say, like, yeah, we have confidence in this crap now, which is, it's funny to me. I mean, I appreciate that they do, but I wish they had that confidence last year.
Their price would be 1,000 if they put all of it. I mean, that would be reckless. But all of it at $100, it'd be crazy.
Yeah. Well, the other thing kind of keep in mind here, so they have 50 billion additional authorized, $30 billion that was previously authorized. That's $80 billion. So even on a $1.2 trillion company, we're still talking about more than 5% of the company is authorized to be repurchased at this point in time, which is a pretty big number.
It's a big number.
They're still sitting there with $65 billion in cash in their balance sheet, and they had $11.5 billion in free cash flow this most recent quarter. And that was actually artificially depressed slightly, they said, by a $1.4 billion tax payment. The trailing 12-month free cash flow here was $43 billion. Long-term debt, $18 billion. They took $20 billion out in loan a couple of years ago, which they had no debt before then. It was probably a very prudent financial move. For a conference call note, this is where things get a little bit interesting, and this is something that I honestly hadn't appreciated when I bought Meta stock. They now own 350,000 NVIDIA H100 GPUs, or 500,000 equivalent, GPU units in terms of their computing power. That Zuckerberg talked about how they realized that initially when they built out Reels that they underpowered the GPU cluster. So they built out one that was appropriately sized to manage Reels, and they built out enough infrastructure to have a similarly sized AI system running at the same time.
And we don't know what that system is going to be.
Well, it seems like this is the direction they're heading, right?
Ready
So they talked about this Llama 3 that's currently undergoing training. They talked a little bit about their idea behind keeping this all like open sourced, and therefore everyone could work on it. And kind of developers have familiarity with it, and that it is the tool of choice, and it helps them attract talent and all that sort of thing. This is what I thought was kind of interesting, is they're pivoting away from just like purely AI that is designed to be like machine learning and solving problems, as into a machine learning that is now going to be able to have more of a general AI kind of thought process, where they have the ability to reason, plan, remember, and then code. It's going to be able to code and improve upon itself.
Okay. I'm trying to
Yeah,
think how they would utilize that with their
yeah.
current business model, because that isn't something that they've ever attempted, right?
No, no, no. They're Zuckerberg was saying is like I thought for a long time that we would be using AI just to answer like simple questions, like which ad to show which person. Because now we're kind of realizing the fact that we have to transition towards an AI which is capable of teaching itself and learning and evolving and growing. So he is now putting his efforts towards this more general AI principle than it is like a question specific AI.
So that's going to be a big debate because most people who are in the space would say general AI is 30 to 40 years away. Like we're not even close. So that's
Okay.
okay. Does this get me closer to Ready Player One? Because that's all I care
Yes,
about. Meta is the
absolutely.
closest company that can get me
Yeah.
to Ready Player One.
I'm pretty sure that we've now confirmed that Skynet will originate from a meta server.
Okay. All right.
It's
All
confirmed.
right.
It's locked at this
I
point.
have a question at the end of
Um,
this then.
all right. So he talked about the amount of compute power requiring to train like their models every year is growing by 10x. That's literally how fast the required computing power is growing right now. It's pretty insane.
Yeah, that's
Um,
gross.
3.5 billion. Sorry, I forgot the B. Real shares per day. I'm definitely partly responsible for that. It's my goal to try to increase that.
Yeah. As a Meta shareholder. Yeah.
Yeah, well, it's really engaging, right? It's the way we communicate. It's kind of become a joke and like a meme now that like that's how we engage with other people is by sending them things we think they're funny that maybe think of them, and then they send the same things back. It's just interesting. I mean, Dylan and I do it to each other all the time too.
Yeah.
And they talked about how messaging is the next revenue pillar. All right, talking about the fact that it's cross-platform, unlike he took a little indirect shot there at iMessage. Right.
Okay.
As well as other things that I kind of wanted to know here, we already talked about this company will remain efficient. 10% of their ad revenue in 2023 came from China. What do you think of that? Interesting, huh?
Um, That's actually kind of surprising, to be honest.
Yeah.
I would have thought it would have been lower because they have so many restrictions in China.
Yeah. Well, I mean, this is all the Timu ads that you're being served on your Facebook or Instagram feed constantly. That's where they're coming from. This is where that ad
Oh, I
revenue.
read it wrong. Okay, that makes more sense. I
Yeah.
don't buy any of that shit at all.
Yeah.
That seems like
I-
such a bad idea. But
Most
Shein is another one.
Yeah, most people don't, but like that is a little inkling of where one of their growth drivers was this year. So it's something to kind of pay attention to and how that evolves going forward, whether or not they continue to have that level of ad spend on meta platforms. And then the business messaging, which it had an 82% growth in the most recent quarter. It's still really, really tiny, $334 million in revenue, but this is like where they're heading towards messaging, by their business messaging or personal messaging as like their next pillar of growth. So it's nice to see, big chunky numbers like that as far as the growth rate.
I will say this is pretty awesome, right? Because you have these visionaries that start a company, and then you
Mhm.
have the Tim Cooks that take over and have essentially done almost nothing for 10 years. Granted, I think today the VR thing comes out, so there's a
Yeah.
there's a caveat there. The last thing they made was a pencil, right? So it is pretty awesome that you still have a visionary who's still in charge of the company. I guess Elon Musk would be another one. And
Mm.
I mean, the share price speaks for itself. This is pretty
Yeah.
disgusting.
Yeah, definitely. Like I said, I appreciated their ability to use AI towards, improving their systems and being able to have better targeting ads and that kind of post Apple app transparency tracking kind of change that happened a couple of years ago. Now, the I did not appreciate them evolving into the actual producer of this like general AI product. That's really where the transition I think is interesting that I did not appreciate 6 months ago that I do think now that they are really on the cutting edge of research, not into just solving their own problems as far as using AI to leverage that and be able to actually track these ads. Now the Apple won't let them do it, but they're building like cutting edge infrastructure as far as trying to create and solve this general AI question, which is crazy to me.
They use the term general AI, correct?
He did.
Ah,
He's like
Jesus. All right.
as time has evolved, he said we're headed that way more and more. And they're certainly in a position, and they've been putting the spend out there in terms of their infrastructure to make something like this happen. Found this little chart here of the NVIDIA 8100 GPU shipments last year. Look at how like above and beyond Meta and Microsoft are compared to like everyone else in the world. Tesla claims to be a like AI company, but look at this.
I'm surprised Google's that low. Yeah.
I mean, yeah, I guess I would anticipate Google being higher than that as well. Yeah, and this is just shipments last year. Never mind, I couldn't find a chart. I was trying to find one of who has the total number that's the highest, because I suspect that would be Meta as well, but I'm not positive now.
Okay, all right.
And then, the thing I love using in order to kind of gauge where a stock is price-wise is this free cash flow yield. So this is where they are as of close on Friday. This is the market cap, their cash position, their debt position, and then the trailing 12-month free cash flow of $43 billion. Gives them a free cash flow yield of 3.67%. Fantastic? No. In the realm of reasonable for these large tech companies.
It's the possibilities that are crazy. It's the possibilities of the next 5 years that is deserving of the share price, not the free cash flow yield.
Yeah, I get that. And just to give a little context, I want to compare it to a couple other companies that are kind of high flyers within this like AI space. If you actually believe Tesla's an AI company, I do not. But in terms of like PEs, you're looking at this, right? So the current PE 43 for Tesla, and forward PE 63. Nvidia, 87 current PE, forward PE 34 almost. And then, Meta right here is 32 on the current PE and 36 on their forward PE. That's after that massive move on Friday. So if they are truly going to be reevaluated and repriced as an AI company, they potentially have a long road ahead of them in terms of share price appreciation, which is insane.
Yeah. So, I mean, previously it was really Microsoft with ChatGPT who had a gross run for like 12 months, right? Nividia, who's supplying. AMD, I know people don't like it, but I mean, they've doubled in less than a year, so that's impressive. So the question is, who made a mistake, and actually you sent me a reel that was, what's your biggest mistake of 2023? And everyone had the same answer, not buying Meta at 90 or 80, right? So yeah. I'm in there. Is this still a good price that you would consider buying more if you had money to set aside to buy it, right? Yeah. So not scrounge around selling other assets to buy this, but if you had more cash.
So it's a risk tolerance question. I am not the most tolerant person of risk in the world. And I would be unwilling to buy more Meta stock at this current price.
Would you be more likely to buy the Q's ETF or Meta?
Ooh, that's a good question. Man, I don't know. Between those two, I would say probably Triple Q's ETF.
Okay.
To be honest with you. Yeah.
All right. No balls.
I'm not going to sell my Meta shares, though. I that was my real question doing all this, and I am going to continue to hold my shares.
Okay. I just keep waiting for a dip. And maybe when it hits 1,000 and drops down to 800, I'll be able to buy some.
Yeah, exactly.
All right, guys. Have a good one.
Catch you next one.